Welcome to Wealth Chapters, the channel where we break down the most powerful books on wealth, investing, and personal growth one chapter at a time. Today, we're diving into a really key chapter from what's basically the Bible of value investing, Benjamin Graham's The Intelligent Investor. We're going to focus on his timeless rules for building a defensive stock portfolio, one that can actually withstand a storm.
For so many people, the stock market feels like a giant high-stakes casino. You've got the flashing lights, the constant noise, and it's so easy to feel like you're just one bad roll of the dice from losing everything. And hey, if you're someone who's worked really hard for your money, that fear of losing it all, it can be paralyzing. So the big question is, how do you invest for the long haul without that constant feeling of dread?
Well, in this explainer, we're going to cut right through all that noise and give you a clear, actionable game plan. We'll start by really understanding the challenge every cautious investor faces. Then, we'll get into Graham's core philosophy, walk you step by step through his practical, time-tested rules for picking stocks, and finally, help you build a powerful mindset that's going to serve you for a lifetime.
All right, let's kick things off with the central problem Graham was trying to solve. See, he understood that for most of us, the goal isn't to hit a home run with every single investment. No, it's just about staying in the game and, more importantly, avoiding those really costly strikeouts. And that, right there, is the core dilemma of the defensive investor.
So, who is this defensive investor? Well, think of them not as some market wizard or a Wall Street genius. They're the everyday person, probably like you and me, who values security and peace of mind above everything else. They are the hero of our story today, and their superpower is simple. It's the ability to avoid big mistakes and just build wealth steadily year after year.
Okay, let's get to the real heart of Graham's thinking. Before we jump into the nuts and bolts of his rules, we absolutely have to understand the why behind them. And look, this isn't about some complicated formula or a secret algorithm. It's about a fundamental shift in how you see things, a move towards simplicity, discipline, and most importantly, a deep, deep respect for risk.
This slide just lays it out so perfectly. It shows the two paths you can take. Over on the left, you've got the defensive investor. They're playing a game of skill and patience. They're focused on established, predictable companies, and their number one goal is preserving their capital. Then, on the right, you have the speculator. They're playing a game of chance, chasing quick profits, usually in really volatile and unproven areas. Graham's entire system is designed to keep you firmly planted on the left side of this screen.
Now this quote, this is the cornerstone of everything. Just let that sink in for a second. Most of us are taught to think that investing is all about picking the next big winner. But Graham just flips that whole idea on its head. He argues that the real key to long-term success isn't maximizing your gains, it's minimizing your losses. If you can just do that consistently, the gains, they'll take care of themselves.
So how do we actually put this into practice? We start with the first set of rules, the financial strength test. I want you to think of yourself as a home inspector. You would never, ever dream of buying a house without checking the foundation first, right? Well, the exact same principle applies here. We have to make sure the companies we invest in are built on solid ground.
Graham gives us two really simple but incredibly powerful checks for this foundation. First, is the company big enough to handle economic shocks? He really preferred larger, more established companies because they just tend to be more resilient. Second, is the company financially sound? This means you've got to look at its balance sheet and make sure it's not just drowning in debt. A company with a strong financial position, it's like a ship with a sturdy hull. It's just much more likely to make it through a storm.
Okay, so once we've confirmed the company's foundation is solid, it's time to check its history, its track record. If that first test was all about the company's health right now, this one is all about its history of performance. We are looking for a long, consistent record of success. And here are the final two pieces of the puzzle. First, has the company shown a consistent ability to make money over the long term? We're not interested in one-hit wonders here. We want to see a steady, reliable stream of earnings. And second, has the company consistently shared its profits with its owners, the shareholders, in the form of dividends? For Graham, a long, uninterrupted dividend history, well, that was the ultimate sign of a healthy, shareholder-friendly business.
We've covered a lot of ground, so let's just take a breath and pull it all together. Graham's rules are so much more than just a checklist. They're a complete mental framework for making smart investment decisions. When you really internalize these principles, they become like a compass that guides you through the often crazy waters of the stock market.
So, to recap, the defensive investor's playbook really boils down to these four simple but powerful rules. 1. Prioritize safety above all else. 2.
Demand a long and proven track record of financial strength and profitability. 3. Stick to businesses you can actually understand. And 4. Look for companies that have a history of rewarding their shareholders with consistent dividend payments. That, right there, is the essence of Graham's timeless wisdom.
And that brings us to our final, and maybe the most important question. When you look at your own investments, what do you see? Is it just a random collection of assets, a portfolio built on hope and a bit of speculation? Or is it a carefully constructed financial fortress, one designed to protect your capital and grow your wealth for the long haul? Graham's work gives us the blueprint to build that fortress. The rest? Well, the rest is up to you.